The big news right now for Bitcoin is the utter lack of volatility, which makes me think we're probably in for some volatility in the not so distant future. But have a look here at this chart. This shows the Bollinger Band width currently down at 20. This is one of the lowest, if not the lowest, recorded reading for the Bollinger Band width on the weekly charts in Bitcoin's history. In fact, I think the previous low was 21. So that means essentially that we are in a period of very, very low volatility. And of course, as you have known, if you've been around the space for the last few weeks and you haven't been in a coma or sleeping on the beach or something like that, Bitcoin's price has done almost nothing for 6 weeks now. Complete lack of volatility, daily trading ranges within the hundreds of dollars sometimes. Absolute craziness. That means the volatility is coming sooner than later. Doesn't necessarily mean it's upside volatility. Upside volatility would be fantastic. It could be downside volatility, depending if we get some shock from the Fed tomorrow, for example. But let's say everyone right now is expecting the Fed to raise interest rates tomorrow by another 0.25%. What if they don't? What if the Fed comes out and says, hey, you know what? Enough's enough. Inflation's down enough. We're not going to raise rates again. In that situation, things get pretty exciting pretty quickly, and that could be upside volatility for Bitcoin. But one thing is sure is that volatility will be coming. This is what the Bollinger Bands tell us. The Bollinger Bands basically imagine it like a rubber band getting tighter and tighter and tighter and tighter and tighter until it just snaps. We're getting close to the snapping point. Don't know how long it's going to be exactly, but we're getting close for sure. I want to share this with you as well. Fundstrat Global Advisors, Bitcoin get to $108,000 before next year's halving as BlackRock's ETF will drive demand. Now, this prediction by Fundstrat has been shared around a few times already. $180,000 before next year's Bitcoin halving. That's a big, big call, as Kevin points out here. If that were to happen, he says, is Tom Lee out of his mind? If that were to happen, Bitcoin would basically need to go straight up from here until the halving. I mean, we're at $30,000 now. We're going to add $150,000 to the price of Bitcoin in 7-8 months. Sounds great. Makes a good headline, of course. Gets Fundstrat's name in the papers. People love big, bold price predictions from these different investment firms. But $180,000, in my opinion, is not a super realistic prediction. I'm not saying it can't happen, because this is crypto. One thing that I've definitively learned about crypto is that anything can happen. However, it doesn't seem very likely it would break the 4-year cycle, which the 4-year cycle will get broken at some point. It's been an interesting model so far, but at some point, the 4-year cycle will become completely invalid. However, this would break the 4-year cycle, maybe earlier than it would break. The BlackRock ETF, if it gets approved, is probably going to be quickly followed by the Invesco ETF, the ARK ETF, the Fidelity ETF, the Bitwise ETF, whoever else is trying to get an ETF. Somebody else will probably come in and get an ETF. It'll be an ETF party. That'll be very exciting. And we will see more institutional money come in via these ETF products. But the major amount of ETFs, we do have our first potential refusal from the SEC in about 3 weeks. That's for ARK's ETF. The final decision time period for the ARK ETF, I think, is December. Most of the Bitcoin ETFs that are in right now, they have their final approval or denial date in March next year, which is right around the time of the Bitcoin halving. The SEC could draw this out for a while. They don't have to immediately approve a Bitcoin ETF. I know we all got very excited. I'm still very excited about the potential for Bitcoin ETF to pump all of our bags. But I am not so certain about 180K by the end of the year. I would love to be proven wrong. I will just put this out there. If Tom Lee at Fundstrat is right and we do get $180,000 Bitcoin this year or before the Bitcoin halving, maybe he gets January or February next year. You know, I'm here for that. I'm here for being wrong and Bitcoin blast into 180K before the Bitcoin halving. I'm all about it. I just don't think it's the most likely scenario, to be honest. But hey, Crazier things have happened without a doubt in these markets. Now, before we get into some of the other things from BlackRock, as well as some of the big things affecting the market this week, just a quick reminder, if you are a trader, you need yourself an account over there on BYBIT. It's the best place for trading cryptos at. So if you want to long Bitcoin, if you want to short Bitcoin, it is the place for you to do it. They've got great spot markets as well for their altcoins. And of course, very popular copy trading. Use that link down below in the description. Get up to $30,000 in trading and deposit bonuses. So check it out if you are a trader. Now let's take a look at this chart here. This is from Bar Chart. They said the S&P 500 right now is trading 12.2% above its 200-day moving average and is clearly overbought, with RSI currently over 70. However, and this is very, very interesting, so listen up. However, since 1970, 8 of the 12 times that the S&P 500 was 12% above its 200-day moving average, it ended up trading to 20% higher. That's according to data from Fundstrat. So that's historical looking data from Fundstrat, not crazy price predictions about 180K Bitcoin before the Bitcoin halving, which, hey, maybe they're right, but I don't think it's the most likely scenario. This is them looking at historical data and saying this is what has happened previously. So it's very interesting. So even though the S&P 500 is 12% above its 200-day moving average, people are saying, wow, it's all overbought. There's too much greed in the stock market right now. We need to cool off, man. Historically, it hasn't cooled off. Historically, markets have rallied another 20% or up to 20%. So we shall see. We shall see. There could be some more fuel in the tank here for the tech rally that has been going on in the stock markets, because there's a tech-led rally by all means. And I think the decade will continue to see a tech-led rally for really all markets. But that's a different conversation right there. But a bullish stock market could do well for the crypto markets because it means that a risk-on attitude continues. And while we've seen all these stocks hit new all-time highs, or they hit new 52-week highs and all this kind of stuff, crypto's been really lagging behind, partially probably because of the SEC and all that malarkey going on there. This is an interesting. British Hodl shared this. 3 analysts at BlackRock published a study on Bitcoin back in 2022. The study concluded that the most ideal optimal risk versus reward portfolio is heavily Bitcoin, 85% Bitcoin, 9% stocks, 6% bonds. That's very different from the 60% bonds, 40% stock portfolio that's often bantered about as being like the safe allocation. And even here in the crypto space, more specifically, we've talked quite a bit about what's a good allocation for the average Joe Blow investor who wants to get some exposure to Bitcoin, but still wants to maintain some of their traditional portfolio. Even 1% allocation to Bitcoin has seen that 60-40 portfolio holder significantly outperform the 60-40 portfolio. So they do 59-40, for example, or 59.5 and 39.5. Just 1% Bitcoin allowed them to dramatically outperform other people holding the same kind of portfolio. An allocation of 2, 3, 4, 5% saw dramatically outsized returns for investors by only getting exposure to Bitcoin, nothing else in the crypto space. Throw some Ethereum or something in there, you're going to get even bigger potential returns. But just Bitcoin. So maximum 5% portfolio risk, 60% bonds, 40% stocks. So maybe you dial that down to 57.5 and 37.5, 5% into Bitcoin. Dramatically larger returns came in for investors in this situation, while only risking 5% of their portfolio. Though these analysts from BlackRock saying basically just ape hard, ape into Bitcoin, ape like there's no tomorrow. You got to wonder about the BlackRock game here. Now, these are just analysts from BlackRock. This is not Larry Fink coming out and saying ape into Bitcoin, guys, although he's kind of been saying ape into Bitcoin, guys, just not in a much more subtle way, right? The Larry Fink kind of way of saying ape into Bitcoin. But it is pretty interesting to think about. I mean, global wealth, hundreds of trillions of dollars, even a tiny percentage of that money coming into the markets is going to be big. But I would also just like to reiterate here, BlackRock is not to be trusted. BlackRock is a market manipulator, right along with JP Morgan and Goldman Sachs. And seeing all these guys, all these organizations pumping up Bitcoin, talking about Bitcoin. I mean, it's such a double-edged sword. On the one hand, it's like, yeah, cool, BlackRock's here, and they launched their Bitcoin fund for the private clients last year. Very convenient that they did that before even trying to pursue a Bitcoin ETF for the retail public. I mean, I guess they need their exit liquidity when the time comes, right? BlackRock's smart. They know how to play the game. But here we go. BlackRock's here. All these institutions are here. They know how to manipulate markets. They have a long history of manipulating markets. I mean, look at JP Morgan, experts at manipulating markets. They manipulated metal markets and Forex markets and basically every market around the world. And I have not forgotten about that cocaine boat, JP Morgan, the $1 billion in cocaine in that boat. Come on. The internet does not forget, my friends. Anyway, these organizations coming in, exciting, bags in a pump, probably not to 180K by the end of the year, like Fundstrat seems to think is some kind of possibility, but it will pump when those Bitcoin ETF approvals start coming through, and we will see big demand coming in from institutional players and the people whose money goes into the funds at BlackRock and Fidelity and other places. So definitely something to keep our eyes on as investors because it is a major market moving event. Interesting, too, Morgan Stanley's Mike Wilson finally admits that we were wrong about 2023's stock market rally. Now, Mike Wilson has been saying basically all year, sky's falling, everything is going to go down. He's refusing to throw in the towel, saying that, yeah, well, I'm not a bull now. It's less time to be a bull, right? Markets have rallied significantly, and we might see markets go on to get a new all-time high. But after such a big rally, irrational bullishness becomes actually a riskier proposition if we're talking about how markets actually work, right? Though it is interesting to see some of the biggest bears on Wall Street finally capitulating. But is it all psyops? I have to wonder sometimes. Everything's psyops, guys. U.S. consumer confidence hitting a 2-year high, although recession fears do linger. This is something very interesting because in spite of the best efforts by the Federal Reserve to crush the economy, to crush small businesses, to make you lose your job, to make you lose your home, to make you lose your car, to make you lose your kids, to make you lose your dog, to make you lose everything and sleep under a bridge. That was Jerome Powell's intention. Basically what they said. We have to cause some pain in the economy. Pain in the economy means all that stuff for you. Not for Jerome Powell. I mean, he's getting paid big time. Not for his buddies. The richest neighborhood in the world is just outside of Washington, D.C. Funny that, huh? Where'd all that money come from for those people? It's your money in their pockets. Anyway, I digress. The economy in the USA remains stubbornly resilient. The equity markets remain stubbornly resilient. And we are on, of course, the eve of the Federal Reserve looking to raise interest rates once again, potentially to a 22-year high from 5 to 5.25%. That is what everybody is expecting tomorrow. Everybody's expecting that raise to come in and for another hit for the interest rates. Although we'll be watching very closely. Although the market is currently pricing like a 99% chance that there's going to be a 0.25% increase to the interest rates tomorrow. The interesting thing is that we could potentially, people are starting to speculation. People are starting to speculate that tomorrow could be the final interest rate hike. Although the Fed has previously said expect 2 more interest rate hikes of 25 basis points or 0.25% each, which will bring us up to 5.5%. Tomorrow could be the last one, realistically. Inflation came down another percentage point last month from 4 to 3%. What happens next month if inflation comes down another percentage point or a half percentage point? I mean, if it comes back down to 2% next month, and it could, we've had 2 months now of dramatic drops for the inflation rate. So if inflation comes down again next month, dramatically so, the excuse the reasoning behind the Fed bringing in yet another interest rate hike wouldn't even make that much sense. And so if the Fed, if Jerome Powell signals or seems to indicate more dovish language, maybe he doesn't say, well, we're not going to raise next month if X, Y, and Z happen. He's probably not going to say it like that. But even if he says some more lighthearted comments around a future raise or potentially slowing down, aka pausing rate hikes, that could put the sales back in the market, send the S&P 500 up to a new all-time high, the NASDAQ up to a new all-time high, and Bitcoin probably to keep ranging at $30,000 forever, because that's what it does.